Invicta Holdings, which is involved in the machinery and industrial consumable sector, reported a 23% increase in diluted headline earnings per share to 238 cents for the 6 months ended September 2011 from 194 cents a year ago. The group's revenue was up 18% to 2.6 billion rand for the period, while attributable profit rose 203.7 million rand from 168.6 million rand the year before. An interim dividend of 77 cents per share was declared, up from 57 cents a year ago.
Invicta market cap 3.9 billion, price earnings 7.2, dividend yield 5.3. Chris, we're seeing a lot of very juicy dividend yields these days. 5.3 is exciting, but not uncommon. And I can remember the days when 3 was exciting and uncommon. Drilling through this, and you picked it up as well, and I had to do a lot of digging to find it. Nice looking business, some chunky debts behind them though.
Some big debt. There's about 3.5 billion rands worth of debt. And there's about 1.8 billion of that in a company called Serec Capital Pty Limited. I'd never heard of them. Not to say there's anything bad with it, but both that and the 1.2 billion worth of debt at Standard Bank both got credit default swaps against them as well. So some interesting financial engineering going on here. Having said that, look, I mean, I think I've heard this company talked in hushed tones by a number of people saying to me, you must have a look at this one. It looks very interesting. And I must confess, it does look very interesting.
It's doing some great stuff. Chris, I mean, what they're doing, they're selling farming equipment to farmers who are booming, mining equipment to miners who are booming, and then construction stuff. That's tough.
Yes,
but
it's a finger in three relatively diverse pies. So you've got some anti-correlation in terms of the cyclicalities in those industries, and that's I think one of its strengths, and in that. That it has the ability to maybe weather a downturn, and that's what makes this company interesting. The debt worries me, okay, especially in these kinds of, because I'm not sure if you can take a downturn in construction as long as agriculture and mining are doing okay, but if two are not firing, will the debt be as serviceable? And that's the question I would ask. Obviously, if they didn't have debt, you could be firing on one of those sectors and still be okay. But that would be the risk that I would flag in this company.
Chris Gilmour, Chris Hart mentioning his concerns around the company's debt levels. Let's get your take on the continued investments in working capital. I mean, the BMG division investing approximately 100 million rand in inventories. Now, this necessarily puts pressure then on the cash generated from operations. We see that down to 99 million rand from 168 million rand. Let's get your take on this investment in working capital, firstly, and also what the company is going to do with the cash. They're mentioning a number of acquisitions. They're going to embark on an acquisitive trail. Your take?
BMG, or Bearing Man as it used to be called, I mean, this is a company that does a lot of importing. And I guess what we're talking about here is stocking up in anticipation of the rand going weaker. If you only go back to as far as September, the rand dropped 20% in 3 weeks. So I think in a company like this, which is this is a very import sensitive company, I suspect what we're talking about here is stocking up in advance of the possibility, and I put it no stronger than that, of the rand continuing to be weaker. That plus the fact that Bearing Man has been around for a long time. Bearing company. They know what they're doing. They've been operating in this market for a long time, and no, I don't see anything particularly sinister in it at all.
No.
Hot or not then for you, Chris Gilmour, Invicta?
I think it's got the potential to be very hot, but I think you've just got to be a little bit careful of this one. You've got to do your homework very, very carefully on this one and delve into the balance sheet. Look at that debt. The debt does concern me. It's a bit on the high side. Service debt to shareholders funds 213%. It's big.
Notwithstanding the debt, Chris Hart. Invicta Holdings, a hot stock for you.
Well, is it on a roll on those sort of bearings? I would be cautious in this kind of world where debt is more of a problem, and that there are some currency concerns. A solid operation, and I would certainly pick it. I would look at the right time of the cycles to actually get in. I'm not sure. I think we more or less at the upper end of a cycle, that top end of earnings, or that would be my assessment. more at the top end of earnings, very good solid earnings, etc. But I'm not sure if they can actually maintain that going forward for the next year.
So Chris Hart obviously feeling concerned around sustainability, and I was just going to say revenue up 18%, profit up 21%, EPS up 34%. Is it really an indication of the quality of underlying operations, because good management only comes through in tough times, Simon Brown?
Yeah, I think two of their three areas are really kicking. They've got this thing called Tautoria, but it probably makes enough money for a good lunch. There would be two things that would slightly bother me. One is that one of the two areas suddenly start to reverse. I think we've probably got a food price that's higher, so that's going to support them. I think commodities are there, so I'm comfortable with that. I think if anything, we get 3 out of 3. So the debt worries me. I think if you want a little bit of speculative, Invicta, hot.
Hot. If you're speculative, Chris Gilmour, give us your hot stock pick for today.
I'm going to be very boring and go back to an old favourite of mine, JD Group. Their results are out next week. I think, we've seen a trading update. We're looking at about a third up from last year. These guys have definitely turned the corner, and I think at this point in the economic cycle, selling furniture on credit, I think is probably one of the right places to be. In the future, when they start getting more and more into car rental on a 3-4 year basis, I think that's going to prove to be very innovative, and I think this has got a lot going for it. It's got a lot of blue sky.
Chris Gilmour liking JD Group, obviously watching his eye on those results coming out next week. Chris Hart, what have you chosen?
Impala Platinum. I think the platinum price seems to be starting to revive again, and that I think will actually help to underpin the price, etc. I think it didn't do too badly today as well, but I think the platinum price is starting to make that sector look a bit more interesting.
Simon Brown, give us your take on JD Group and Impala Platinum. Hot or not for you?
JD Group I like, and I think they've come through the cycle very well, and I think Chris is right. I think they're very, very well positioned for it. Their cost leasing, that it's going to need some strong balance sheet. They got Steinhoff with all those deals with Cap International and the like lurking in the wings. Like JD, Platinum, if you're going to buy a Platinum stock, buy Implat. Some folks will say, what about Implats? I think that's out of the price. So if anything, it turns out they get something out of it and it'll boom. So hot to both.
Hot for Simon Brown.